Hey guys, this episode is brought to you by River Valley Town Square, which provides free marketing for businesses on rvtownsquare.com. Visit the site and add your business today to join the list of ever-growing things to do in our community. Thank you guys and enjoy this episode of Level Up Local.
Welcome back to Level Up Local. This is season 2, the very first episode we're doing here in the new Town Square studio. Today we have a special guest, Esme Rubio from Rubio Tax and Rubio Accounting. Welcome to Level Up.
Thank you, Tal.
Good to have you here. How long have you lived in Russellville for?
Since 2006.
Nice.
So that's been
quite a while, almost 20 years.
Graduated high school here in Russellville.
Did you always know you would be starting a business here?
Not starting a business. I never really had thought I could do that, honestly. Since I was younger, my parents had some rental properties, and I just remember I loved writing down like what the income was, what the expenses were, having it all organized in order. And at that point, I didn't even know what an accountant was. I didn't even know that field existed. And it wasn't until I was in high school, like maybe 11th grade, that they had an accounting class. I'm like, wait, this is what I'm doing with, my family. And I loved it ever since.
Wow. Most people I talk to do not like accounting.
Yeah.
You're just wired differently.
Yeah, that's my passion, dealing with numbers, having everything organized. And in this field, you have to be really organized with working with businesses.
Yeah, I guess the errors in what you do could get them in trouble, right, with the IRS. Or
You'd be surprised how much cleanup I've had to do on other accountants' work. And I'm like, how can they even, call themselves an accountant if you can't be filing things on time? And clients keep getting letters saying that you owe money. And like, that's the whole reason you have an accountant, is so that they can take care of all their financial stuff and like not be behind on payroll tax because, the accountant was sick and didn't have the backup plans and stuff like that.
a buddy of mine has a business. I won't mention who, but he recently got a letter from the IRS saying he owes, or no, maybe it was a meeting. Like an agent came to him, said, "Hey, we need your records. We're auditing you." And
Probably didn't even realize he had so many things missing.
yeah, well, he gave him a big stack of papers because he handled all of his invoices through papers, but wasn't ever paying tax on a lot of these things. He didn't know he was supposed to. So they said he owes like $70,000. So if you were his accountant in that situation, how can you fix that?
So it would be what type of tax? Because there's different types of tax. There's sales tax, there's payroll tax, there's income tax. So it would just be depending what type of tax, and trying to figure out what possibilities are there to, because there are some type of tax that will let you do an offer in compromise where you can show them, hey, I don't have $70,000 right now sitting in my bank account to pay you, so we can set up a deal with the IRS. So it just depends what type of tax it is and if they have that option available.
Okay. Is the IRS, I guess you handle that for your clients? You reach out to the IRS and negotiate. Are they pretty easy to deal with? Or?
So calling the IRS is a headache. So I try to do everything that I can. For example, I got this really good software where instead of me having to call the IRS to figure out, hey, do you have this tax year, or do you have this payroll quarter? Was it submitted? Was it not submitted? I have a software that I can just pull 10 years worth of data from the IRS, and it's live. So I can see all the postings. I can see, what year you owe. So a lot of accountants don't have this program. And I'm trying to do everything that can be modern and efficient, because calling the IRS can take 2 to 3 hours on hold, and then they'll just hang up on you too. So like, I remember that was one of my biggest headaches. And that's why a lot of, when a client would come in with a problem, it was so hard to deal with, because you knew, that calling the IRS is going to take a whole week just to get a hold of them. And so I was trying to see, okay, how can I make this service better? And that's what I'll try to figure out which softwares were the best to be able to help my clients.
Wow. So that's something I've noticed working with you and talking to you, is you focus a lot on optimizing things. Sometimes it can be hard as a business owner. You come up with a way of doing things, maybe for editing videos, for example. But if you're not willing to accept there's maybe a better way to do it, you'll just hold on to this thing that you know
Yes.
works, but there might be a 10 times faster way to do it.
So you have to, as a business owner, as a business owner, I learned that you have to continuously be improving your services. If you can do that, your clients are going to be even more happier and more willing to, send you referrals because you're doing something that nobody else is doing.
Mm.
So, for example, on the tax preparation side, it's very it's become very normal in the accounting industry that your accountant, your CPA is way too busy. You want to call them for a question, like they're busy. And if you call for a callback, it takes a while to get a callback. Well, just trying to transform the way you do things internally to be available for client questions. Because in the business world, there are so many variables that you need somebody that knows more than you to help you out. But if that person's always busy and not available, then you're kind of trying to figure things out on your own, and then you accidentally make the wrong step, and then now you don't know how to take care of something, and it just becomes a bigger problem.
Yeah, that's a good point. So you personally talk to your clients when they call you?
Yes. So, for example, right now we have a system where I'll take care of all the business clients. So I have a special phone number that's just for business clients. So I know that, hey, this is somebody that is going to need help, and I try to be able to answer right away. So it's just for them. And then I have another phone number that's just the receptionist. Okay, if I need a copy of my 1040, well, you can call the receptionist. So for some more simple tasks and stuff like that. So what I'm currently doing is doing that differentiating. If it's just individual income tax, they stay with Rubio Tax. But if it's with business, then I have my new Rubio accounting firm that is going to be helping them, giving them the top service.
Right. Yeah, and that's I'm glad you brought that up. Rubio Tax, which is a well-known name around here, and now you've started Rubio Accounting, which you've kind of already said is for businesses.
Yes.
And why might a business um, choose like to hire out versus maybe they've had someone doing their books for a while in-house? Do you see that a lot do people have people in-house? The bigger.
Some of them do. So some of them do their own bookkeeping. Some of them have, like, if it's a husband and wife, sometimes the wife will do the books. I still think it's very important to have somebody knowledgeable either do the bookkeeping or at least review the bookkeeping. And I can just give you an example of something that came across just 2 days ago. So I had a client ask me, hey, I did an investment. I bought a property and I invested so much in the property. How come I didn't see any reflection of that in my tax return? Like, I didn't see, my tax liability go down. I'm like, well, it depends what you presented to your tax preparer. Because if you presented to your tax preparer, I bought this for 40,000, I invested another 40,000 in it, they're just gonna automatically, the easiest thing to do is, okay, then the value of this property is 80,000. If you rented it out, then they use that value and it gets divided into 27 and a half years. So that 40,000 you paid in, you're only getting like a 3,000 deduction on it every year for 27 years. Well, if you go with somebody that can tell you, the best tax scenario would be, hey, while you're doing the work, separate it out by sections, like this is for flooring, this is for roof, this is for the walls. And then what you're going to present to us is, okay, it'll be like a line, like a totals by category what you spent. And then what we'll do is anything that is 20 years or less that life, for example, flooring, instead of depreciating over 27 and a half years, if it's something that's going to be in the category of 20 years or less, we can do section 179 depreciation and depreciate it all in 1 year.
Mm.
So now that you can deduct from that 40,000 that you spent, very possibly 30,000 of it, you could deduct it in that first year. But you just have to present it differently. And then if you don't go to the right tax preparer, even if you have it broken down, they might just look at it and just bundle it all together in that 80,000 cost of the building divided by, because that's what we're so used to.
Right.
As accountants, we have to add the value of the property to the everything, any work that you've done to get it ready to rent out, add it to the value of the property. But that's where having tax strategy helps. And I've been taking anything related to tax strategy, I've been taking classes on, and I've seen how look at things a little bit differently, basically, and have a where the tax situation turns out better.
So you've been investing in learning more.
Yes. So, learning everything about tax strategy, tax planning, so that we can offer more than just, tax preparation is more like, okay, this is what happened. Here you go, and put the numbers in. Well, we're no use to the business owner. We're not saving them any money because we're just, using their numbers and put it into the tax return. Well, if you could come with me at the beginning of the year and you give me prior year's numbers and we can come up with a plan and say, hey, if you were to do this a little bit differently, or if you were to start, categorizing this a little bit differently, you'll have a better tax situation at the end of the year. And then we also have the tax strategy where you could even legally bring it down to zero. You do have to get involved into different things, but at least you have a plan. And even if you can't do it now, but you could, do it next year. And I think every business owner should have that plan, like how you could legally pay zero, because if you're paying 30,000, 40,000 in taxes, you could use that money to grow your business. You can use that money, for a better return on investment. So I think every business owner should, once they start having to pay into the IRS, they should invest in doing some tax strategy.
Right. I guess right now we're talking about businesses that would be an S corp, right?
Yeah.
Or higher than that, not necessarily a single member LLC, sole proprietor.
So very interesting. We always get this confusion. So an LLC can be taxed 3 different ways. So when you create your LLC, it is automatically a single member LLC, so it's a sole proprietorship. You have the option to tell our IRS, hey, I want to be an S corp. Or you also have the option to say, hey, I want to be a C corp. I want to be taxed differently. So on that part, you can be an LLC and you can elect to be taxed as a S corp or a C corp. And that's where having the right structure can save you money. So for example, I won't recommend an S corp until I start seeing you making at least more than 40 to 50,000 a year.
Okay.
If you're making less than that, you're good where you're at.
But if you're making more than that, that's when you say, hey,
let's change it to an S corp. And what that does is you're having to pay self-employment on all your income when you're a sole proprietorship. When you become an S corp, you get to tell the IRS, hey, my business is doing really good, but if I were to hire somebody in my position, I would only be paying them, like, let's say 30,000. So like if your business income is let's just do round numbers. So like let's say your business income is 100,000. You can tell the IRS, hey, somebody in my position would only be making 50,000. There's no way they'll be making more than that. So then you can put yourself on payroll and then pay those taxes just on the payroll option, on the payroll part. So then you're saving that 15% on the other part that is as business income. Okay. So that's why you have to be earning more than what a reasonable pay would be in order for the S corp savings to kick in.
Okay. Interesting. I, at the risk of looking dumb, I'll tell you how I've done my accounting for the last 2-3 years of being in business. A Google spreadsheet. In a Google spreadsheet, I have different rows and columns, right? So I have each month laid out. And please tell me if I'm doing this wrong, because I genuinely don't know. I've got it all laid out, and then okay, row, this will be the staff. This will be the income at the top, and then the staff, or when I say staff, okay, maybe that's the wrong word. Any contractors? Because to be honest with you, that's how I've been rolling. And then software expenses, and then other expenses. So I do my best to go through at the end of each month, and it's always been at the end of each month. I just look back, I go through the bank statement, okay, here's $5 in Amazon. What was that for? Okay, that was for equipment. Okay, equipment, and then I put that in, and opening and closing balances, and that is it. So how much am I messing up here?
Well, there's a quicker way that you could do it.
Okay.
Have you heard of QuickBooks?
I have heard of QuickBooks.
Yeah.
Never used it.
So I'm gonna be honest. When I first looked into QuickBooks, I was afraid of it. It had way too many things in there that I couldn't find where the things were. So I actually stayed away from QuickBooks for a long time. And I had to go back to it because I was getting a lot of businesses that had a lot of transactions, and the softwares that I was using were just not the best. So I looked back into QuickBooks. I'm like, fine, I'm gonna have to go in and learn how to use this program. And now I love it. I
It's one
love
of
it.
those things where if you challenge yourself to accept something new, you become way better, way faster, way better, optimized.
Yeah.
So QuickBooks, I should be using QuickBooks.
So on the QuickBooks, why I recommend it is because all the transactions pull in from your bank account, and then you can actually set up rules, meaning that like if you have the same places that you use, the same vendors, you can have it automatically set. Like if I buy from Amazon, I automatically put it as office expense or office supplies, and then you don't ever have to categorize that amount because it's already been categorized. So then when it comes to reviewing your month, the only thing that's going to show up is stuff that is from different vendors that you have never used. But if you keep using the same ones and you start adding rules to it, basically you don't have to do much of review. Basically, all you go and do is go and run the report, and it shows all your income and expenses.
Right.
So it's a lot
What else
quicker.
can it do? Can it like project things for me?
So it does have a cash flow option because it does have different like you can upgrade to different versions of QuickBooks. So I recently started using the cash flow option for like rentals. So like I know at this exact time, like which time the payments are going to be made, the water bill is going to be made, and then it'll give me a projection of like, hey, your money in your bank account is going to be low between this period right now. So then that kind of gives you ahead of time, like, okay, I gotta make an owner deposit just to make sure that how much will cover the bills for that month.
That's actually something I've been looking for. Like the other day, I wrote a check to another business, and it hasn't, or at least it hadn't been cashed yet. And I kind of forgot about it. And then I realized, like, oh man, what am I doing? Like, I'm operating with less money than I actually think I have right now because that's coming out at some point. So can you do that too? Just add checks.
Yeah, so you can actually print out checks directly from QuickBooks too.
Okay.
So then that way it just gets put in there as undeposited, so it's pending. Yeah.
So this studio we're in right now, there was costs associated with all this equipment in here. Setting up the office, setting up this thing, all the equipment we're using. What should I be thinking about as a business owner as far as writing this stuff up? Again, my LLC is basically it is a sole proprietorship. So all of my taxes in the past have been on my personal tax return, and I've actually never paid in any taxes. I've only ever received money back. There was a scare last year where my tax preparer said, "Hey, you owe 20 grand." I was like, "What?" And then we started thinking, okay, I forgot a bunch of expenses we had that were business expenses. So that helped. That saved us there. But what should I be thinking about this space? Because right now, I mean, is that enough of what I've done? I mean, I'll switch to QuickBooks. I'll do that because you told me to. But is just categorizing it as office expenses enough, or should I be thinking about depreciation on any of this equipment?
So most of the time, like clients want to have the depreciation that first year that they made the expense. Now, let's say your income is gonna keep increasing year after year. So
That would be nice. Yeah, that's the goal.
yeah, so like let's say you were gonna depreciate $1,000, like $1,000 in depreciation today versus $1,000, like if you it spread it out like in the future. Let's say next year you're at a different tax rate, so that same $1,000 is gonna be worth differently to you.
Would it be worth more or less, or
It would be worth more because let's say you're at the 10% tax rate right now. So that's gonna by writing off $1,000, that's gonna save you like what $100. Let's say in next year you're at the 22% tax rate. That same $1,000 is now gonna save you $220. So that's where having an accountant help you, okay, what, not just like look at the numbers, but like what are your goals? What is the um what what are your goals, and then what plans do you have for the future? Do you think your income's going to stay the same? Do you think it's going to go down? That kind of helps make the best choice on it.
Okay. So when you say like, what are my goals? Are we talking like future purchases I plan to make with the business, or how we may grow, who we may hire? Like, what is that?
Okay, so for example, I have a bookkeeping client,
Okay.
and with him just being able to share one of their goals was like, we want to get an extra employee. That was and try to but he wasn't sure if he could afford it, and he didn't want to be where he was in a position of, hiring somebody and then having to let them go. So just with him sharing that information, I was like, well, looking at your numbers, you do have this, credit card that you're paying interest on, and it's around 600 to 800 monthly. What if you find a way to pay that off, and then that freed up money can help you get that new hire? He was so happy that I brought that up to him, because he was able to do just that and be able to free up some cash flow. And if he would not have told me about what his goals were, I would have never brought it up. So that's where, as an accountant, you have to do more than just looking at numbers.
Yeah.
And being able to talk to your client, figure out what their goals are in their business, and that'll help us be able to recommend things to them.
Yeah. No, that's a good point. Because if you don't talk to them, you're not gonna. You may, like you just said, discover things. Like, oh yeah, they have this credit card that they're paying off. Um, so with Rubio Accounting, working with more businesses, is there? I mean, really, is it open to any type of business, small, big, large, or are you really
So
wanting to focus on one type of industry or size?
So most likely it would be like S corps or businesses that are wanting to see if they can become an S corp if it's beneficial for them. So it's usually the ones that are having to do, bookkeeping or have payroll, because we're trying to get more clients that we can do everything for them, like do their bookkeeping, do their payroll, do their tax preparation, and then do tax strategy. Or I have some clients that, like, let's say their spouse does their bookkeeping, but they want tax strategy and how to pay in less. So those would be the clients that I feel that we can service better. Those that are having to pay in to the IRS, be able to help them with some savings, or even just being able to prepare their tax return on time. There's so many that, CPAs or accountants that are so booked, and you may bring your information and it's already in, February, but they might not do it till September. So that's where I'm have set up my business structure to be differently, where if you bring your stuff in, we'll give you a set time. Sometimes just communicating with the client so they know, hey, between this week we're going to be working on your tax return. So if we have any questions, we'll call you during this certain week. Instead of, you calling and like, hey, is my tax return ready? Oh no, we're busy. We're trying to catch up. And then you call again, and then you're just like in limbo. So we're trying to be able to communicate, better with the client and provide an overall better experience with the client.
Yeah, no, I've experienced that before. Usually, I'm like one of the first people to get the information over there because you know I know some people like my dad. He'll extend it. He keeps getting extensions on extensions. I like to do it pretty quick. Um, so once you're above that 50,000 a year, you recommend going to an S corp, and then with an S corp, the way that you would pay yourself would be through like a W-2,
Yep. Mhm.
and then your taxes are now separate. You have
Yes.
your business's taxes, and then you have your personal taxes.
You're at the S corp level, your business doesn't pay anything. You still have to report like all the income and expenses, payroll, and the business S corp return, but all of that flows through to your personal return.
Okay, so it
So
still flows through to the personal.
yeah, so like on your personal, you'll have your W-2, and then you'll have a K-1, which will just have a one line item of what was the profit of the S corp
Okay.
that gets reported. And you want that because at an individual level, you pay less taxes, versus a C corp. So like the C corp, the tax pays taxes. The business as a C corp, the business pays tax at 21%. And then if you take money out of the business, then you have to pay taxes on that amount too. So it's double taxation
On a C corp.
on a C corp. So you don't want the business paying its own taxes. You want to be able to flow it through your personal. So I get a lot of misunderstanding is like, they'll create a business, they're making good money, but they're like, I have not touched that money. It's still in the business account. And then they are under the assumption because they have not touched it that they're not going to have to pay taxes on it. And that's where I have to kind of explain like, well, that works under the C corp status. Like if you don't touch it, you don't have to pay taxes on it, but the business will still have to pay taxes on it. But sooner or later you will take that money out. Like it might not be this year, it might be next year. And when you do, it's going to be double taxation. So you actually don't want that option. You would actually want to be an S corp, and then you'll have to pay taxes on it, even though you haven't touched that money, but it's going to be at a much lower rate.
Interesting. So why would you ever be a C corp?
So if you're always reinvesting your money of the business, so for example, let's say you have your W-2 from your business, and then anything extra always gets reinvested, and you don't touch any of the extra, which like Amazon is the perfect example. They never have a profit. All their money that they're always using it to reinvest and come up with new products and new stuff. But it's a very rare that somebody will have a C corp.
Okay, I see. So how do I reclassify my LLC? Do I have to do that with the state, or do I contact the IRS?
So
S corp.
it would just be an application, the S corp election that you have to fill out with the IRS. So it's kind of like an agreement just with the IRS saying, "Hey, I want to be taxed as an S corp." The Arkansas will automatically accept the S corp status if the IRS gets accepts it as well.
Okay.
And then
So
you don't have to do any changes to your LLC. All of that stays the same.
so we are in October right now, and the whole year is behind us pretty much. If I were to do this, apply for elect S corp, does that take place for the whole year, or will there be like a split return?
So you can choose to have it like done as of right now, or you can choose for it to be done like from January forward.
Okay.
And because if you do it right now, yes, you'll have to split your income and, do one report on your personal from like January to where are we in October 20th? So yeah, January through October. Do that on your personal and then and most of the time, like if I see big savings, I'll do that. If not, I'll just tell them, hey, just do it from January forward, so you're not having to pay two tax returns. Because now you have a business S corp tax return that it's not going to cost the same as an individual tax return. So since it's really close to the end of the year, do you really want, to pay two when you only use it for like 2 months?
Yeah. Well, I might have to schedule a meeting with you to talk more about the details of that, because I think it's probably about time to switch it and start doing things different in the
And
future.
there is a deadline of it's March 15 for the current year that you want to have the S corp election. So like
By March 15th.
yeah, so like for 2025, if you want to be an S corp, you have till March 15 to elect to be an S corp
Okay, so I can't go back this year, 2024.
because you already have a current LLC. No, you can't because you already have a current LLC.
So
If you were
it
to,
would just be moving forward from this
Yeah.
day forward for 2025.
Yep.
Okay. I
Yeah.
see.
The times when if you don't have no LLC and then you create an LLC like in October, then that's where you would have like two different tax returns, and we got to figure out, okay, should we create the LLC now and then just do the S corp election for like the beginning of the year?
Okay, I see.
But I always, before I do an S corp election, I always like to run the numbers first and make sure that the client is having some savings, because you have to take into account payroll processing fees, like how much you're gonna have to be paying to run your payroll, and then how much if you're gonna have are you gonna pay for your business tax return at the end of the year. So you have to be able to have enough savings to cover those fees. If not, it's not really worth it.
Okay. So, are there any other things that businesses should be doing that they're not that could just save them a ton of money or make them money? Anything else you'd like to add to that?
Um, I can't think of anything right now.
That's all good. Um, personally we're at this stage where a lot is changing about our business model. So, um, good customer service, I guess that's part of it. Marketing yourself, good customer service, as far as acquiring new business.
Yeah, I think that especially like in the accounting world, I'm really shy. But when it comes to business, that's one of my passions to talk about, taxes and how it's working, what you can be doing differently. And that's what I've noticed where when you go somewhere, you can tell if that person loves what they're doing
Yeah.
versus they're super stressed. They're just trying to run the numbers, enter it in, just
Yeah.
have you sign
Yeah.
really quickly. So, that's where I think that if you're a business owner, you want to choose somebody that loves what they're doing, that wants to help you out as a client and be able to give you advice. And that's where I think that kind of differentiates us from other people, from other businesses.
Yeah. Yeah. No, when you said at the beginning of this episode that you did your parents' accounting and you loved it, I knew immediately that you love what you do. You're
Yeah.
different than me, at least. Math was never my. But yeah, you want to work with people who love what they do because they're going to be the ones that are investing in education. How much do you think you don't have to say this, but how much do you think you've invested in education post college? Just like in continued education.
I think continuously, I want to say right now, I'm working on my enrolled agent certification where I can represent you kind of like a lawyer can represent you, but it's just for IRS stuff. So I'm trying to get that certification. It's kind of surprising like how much continuous education you can be even after like graduating, how much continuing education you can keep on doing, and just how much knowledge, all that knowledge helps you be a better be better with giving better advice, like being on top, especially in the accounting and tax industry. The laws are changing every year, so being on top of that, it's just during COVID, the IRS, the government was doing where you could take money out of your retirement account, and you still had to pay. You didn't have to pay the penalty, but you still had to pay in taxes on it. So I went in there and did all my research. Okay, how's this gonna work? It would give you options to split that retirement, like what you took out, split it within 3 years, so that it wouldn't be such a big burden, or having to report all those taxes in 1 year, um, having to report all that income in 1 year. Well, somebody else came to my office and then like, oh, I did an estimate, somewhere else, and I was trying to see if you could help me out because it's a big bill. I'm like, and then when I looked at it, like, they didn't give you the option to like split it between 3 years. They're like, no, they said it's taxable. I have to report it. I'm like, yeah, but the law says, had some options for tax relief where it would allow you to split it, between 3 years. So that's one of the things that I'm always on top of, trying to learn all anything that's new. I'm always trying to learn. So it's continuously.
Yeah.
Yeah.
And you were the only accountant I know of, at least in this large region, that makes YouTube videos
Oh yes.
in case online. So that's good to see too. That you're putting a lot of free value out there. So if you're listening, go check out what's your channel name? Esmeralda Rubio or just Rubio?
Esme Rubio Accountant.
Esme Rubio Accountant on YouTube. Good stuff there. Well, thank you so much for joining us here on Level Up Local. We covered some good stuff today. We talked about maybe the type of business you should be running, ways to save a lot of money. You can pay legally zero in taxes if you take the right steps. Maybe do you have a lot of people that do that, or is it very
So
tricky?
a lot of people don't know about it, and the client that I had, he was paying in almost over 100,000 in taxes. So he came to me. He like, there has to be a way that I can pay less. And I knew, that was like last year. Like I knew if I didn't give him those options, that he was gonna go look somewhere else. I'm like, why don't I help him? And at the same time, I could help more people. And, that's when I started researching everything about, how to legally pay zero in taxes. And there's something called cost segregation study that you can buy real estate and you don't have to even spend anything on remodeling, because a lot of time when you buy real estate and people think that they have to remodel it to write off all those expenses. Well, with a cost segregation study, you don't even have to touch it. Basically what it does, it gives you up to like 30 to 35% write off in the year that you buy it. So if you he was already planning on buying real estate, because a lot of people that are earning good money, they're trying to reinvest their money, and they're already buying commercial property or residential property. So it was something that he was already doing, but nobody had told him about cost segregation. So then we were able to um, he was able to purchase a commercial property, and then we were able to do a cost segregation study on it. So that 500,000 that he spent, about um, 35% of it, he's gonna be able to offset his income. And if you know about, they always say that real estate, but they don't really explain like how. And when I figured out about cost segregation, like that's how the millionaires are doing it. That's how the billionaires are paying zero, legally paying zero in taxes. And just because the smaller businesses, they don't have those huge resources of paying these tax advisors. Um, but that's where I can bring in that knowledge to the business for a lot less than what the billionaires are paying, and still use those same tax strategies.
Wow. Well, so does that work for you on your personal taxes as well when you buy real estate? Or is it
Yeah.
just strictly for okay.
Yeah, so like I have several rental properties and I didn't know about it either. And I was an accountant. So that's what's really interesting about tax strategies. I guess it's something more, not a lot of people know about it. Even as accountants, I just thought, you make money, like you have to pay taxes on it. Like there's no way you can't pay taxes on it. But as I started researching more, I'm like, I could have been using this a long time ago on myself. And so that's where using that for my personal knowledge is a big help too.
Nice. Nice.
So I'm in it for me
Legally pay
too.
zero in taxes. So have you gotten that to work for you yet?
So this is gonna be the first year, because I guess I bought this is gonna be the first year I'm gonna use the cost segregation. Um, because it has to be on property that you're gonna rent out. It can't be on property that you're gonna flip and sell. So that's where I kind of switched what I was doing. Instead of buying and selling, I'm like, okay, I'm gonna buy it and rent it, and then use the cost segregation, write off 30 to 35% of that purchase cost, and that will offset my business income.
Mm-hmm.
And so that helps you pay legally less in taxes. So sometimes it's just making that knowing how it works, then you can make better decisions and be able to pay in
You can't play
less.
the game if you don't know the rules, right?
Exactly. You can't play the game if you don't know the rules.
Nice. Well, with that being said, thank you everybody for listening. You can find Esme on YouTube, on Facebook, RubioAccounting.com, Rubio Tax as well here in Russellville. And yeah, thank you for watching. Make sure to share this, like, comment, subscribe. See you in the next one. Good job.
Oh my gosh, I was so nervous.